So we had a nice down move on the S&P 500. This is what I was actually looking for, at least the initial stages. If you remember from the last video that I made on Monday, because we did have Labor Day weekend. Typically I do these videos every Wednesday and Sunday, but with the long weekend, had a little bit of a change in the schedule. Regardless, we did have downside. We went below this blue range. If you remember what I said in the last video, I said once this blue range was broken, we'd see more bearish bias and more downside. We did in fact see that. And now what I'm looking for, as you can see with this blue arrow that I have on here, I actually drew this yesterday. I did this back near the low of day. I was looking for some type of a bounce and double bottom formation around here. We ended up dipping a bit lower today, just based on the open on the S&P 500. However, we did pick up, so we were back in line with this arrow. I would like to see upside between Friday and possibly Monday up to this blue range again. I believe just based on how today went, that this is a nice minor low that is forming before we see some more short-term upside, which should be followed by more downside. Remember, I do believe that there will be more downside here into the end of the month. However, at the moment, just based on technicals, I like how it bounced so far. Your confirmation of there being more short-term upside, at least up until this blue box, potentially all the way near the higher end of this, would be a gap fill over here right around 4,465. If that can happen, then that is a sign of a confirmation that minor lows are in and we can see more upside. So this is what I'm tracking right now on the S&P 500, 4,430. This pivot's still working very nicely. We bounced off of it numerous times today. So I like what I see based on a support, and this is just in the short term overall. Also, something else to note, implied volatility was up quite a bit during the last 2 days of this down leg. So a lot of participants were getting a bit worried and wanting to hedge as we saw downside here. Typically, this is indicative of a shorter term bounce in the market just to get rid of a lot of those hedges before more downside afterwards. So that's something that I'm watching for. One of the variables of why I believe that there will be a shorter term bounce from here before more downside. Also on top of that, next week is actually bullish in terms of seasonality. So I track seasonality, and next week is characteristically a bullish week. So it doesn't mean that it has to be, but that's just a variable that you can add in with your trading. And that would just mean to be cautious if you are short at the very least, just because there can be some more bullish flows. And we do have OPEX next week and CPI. So a lot of events to look forward to next week. However, at the moment, as long as these lows can remain intact, then a minor low formed before some more upside. And then next week, potential for another short opportunity. We got an opportunity from up here after this distribution for downside. Now it's a little bit more choppy / up, followed by some more downside, hopefully by end of next week. So that's what I'm tracking right now at the moment. Also, another thing that I'm tracking is Nvidia. A couple big developments as of today. We, of course, had this news appear this morning. Now, how reputable is it? I don't know. We'll have to see. It seems like probably an attention grab. That's just my bias at the moment. Could be right. And we'll have to see, of course, with time. However, something that did not help Nvidia in the public eye at all was this information that we also saw today. And this is insider transactions for Nvidia. The director, the CFO, and the president of the company all sold a ton of shares. Now, just to preface this, they still are holding quite a bit of other shares. And part of this was options that were expiring just because they get a variety of different incentives for being high management in the company, like RSUs. But it is very interesting that that happened all within the past week. All these orders are very large in terms of the amount of money that they were taking out, and they're all selling, as you can see up here in this supply zone that I drew in I think it was 2 or 3 videos ago, that I drew this supply zone that I was watching because I was looking for some type of a rejection. And if we did get confirmation above or below, then I would take a trade setup on it. I didn't personally take a trade setup on this, but it would have worked very well just based on the strategy that I was looking at. I was looking for an hourly close below this range. And yesterday, if you look at the 1 hour, actually, you can see we did have a nice hourly close below. The problem was it was a very large hourly close, so kind of difficult to trade just based off of that because this hourly candle was about 3.5% to the downside. So I don't typically like it when it's such a large candle because then that inflates the amount of risk if you were to enter down here. And of course, you would have had to hold overnight to be profitable on more downside afterwards. So I personally didn't take this trade, not the best of overall setups. We did see downside again from the supply zone. And again, like I just said, we saw a lot of upper management selling in this supply zone as well. So if this is retested anytime soon, let's say if it bounces back up to here, it's going to be a very hard resistance. It's going to continue to be a very hard resistance until it is able to break through, which at the moment it's going to be a difficult job for Nvidia to do. I actually have more so of a bias for it getting back to this trend line down here, especially if the market decides to sell off here into the end of the month like I'm expecting after this short-term bounce, of course. But this trend line, super basic trend line, but still, this would be Nvidia's next stop. If it continues to sell off from here, confirmation of this trend line likely being touched would be a gap fill of around 433 from over here, because that would eliminate a lot of the upside momentum that this gap brought. So just keep that in mind going forward. Just wanted to bring this to your attention. And speaking of tech, because Nvidia is in tech, a couple of things I do want to mention. One, we saw a lot of bearish flow today, just based on QQQ, and that's actually been consistent between yesterday and today. We saw a lot yesterday, and then we saw a major gap down today in QQQ, and then we saw a lot today as well in the early session, and it was pretty stagnant throughout the entire session. We had a nice bounce upward during the morning, and then this is when they added. We saw 1.5 million in premium, 1.2 million, 1.1 million, etc. So a lot of those, and these were out the money, a little bit further in expiration, but we did see some October, and then March is not too bad in terms of overall expiration. And then of course up here you can see these September ones for next week, that September OPEX date, 1.3 million. So quite a bit of puts, and then later on in the session there was actually some put selling, not the same contracts that we saw them add earlier in the session, but still something that is notable. So these are still open to the best of my knowledge. We will see what happens tomorrow, because that does contradict my shorter term bounce thesis, but we will see what happens. They were profitable as of this morning from the orders that they got yesterday. So again, a good basis of risk. We just look at the S&P 500 here, would be a break below low of day, sending us a lot lower here. So keep this in mind, 4,430, just market wide. If this level goes, especially down to 4,420, if that level goes, we will see a lot more downside afterwards. So just a key level to note. Regardless, decent amount of put flow today, hitting the tape on QQQ. And also with the tech theme, I do want to mention Amazon. This one's very interesting to me. Very strong upside today. And I'm actually going to go to the 15-minute chart. A couple things with this. There was a very unusual order that hit the tape earlier, and we actually posted on the Cheddar Flow Twitter, was Amazon here, and it ended up being a power alert. If you look over here, I typically filter during the day for about 500,000 in premium, sometimes 200,000 to see repeat sweepers, but we did have this $500,000 order. This was 20,000 contracts. So this is a rare order to see 20,000 contracts. And look at the date over here. It was 9/08. So that is tomorrow's expiration. This is the weekly contract. And this is quite a bit of premium for a weekly contract. Again, very rare to see 20,000 contracts. And it also was out the money. So automatically, this is a highly unusual order. Cheddar Flow does highlight these in blue. That's why it's blue. Also is marked as a highly unusual order. It also is an opening order because volume is over open interest in this case. So unusual order. It was posted earlier on the Cheddar Flow Twitter. And what ended up happening was this one went up quite a bit. So you can see over here actually in power alerts, 188% by the end of the day. Of course, power alerts, some of these are going to end up being losers as you go down. You can see negative 3.33% here, negative 94% here. You do have to remember there is a caveat to these major losers here. That's just because there's of course a theta risk with contracts, especially shorter term contracts. So these 9/11 expirations, these could have been green at one point, but eventually depreciated afterwards. So you have to remember that the intent isn't always to hold until the expiration with these contracts. This could have been an intraday trade that the trader took for about 15 to 30 minutes, let's say. So it's all about context with these because you're going to have some that go down to negative 99% just because of that theta value. So the best use case, in my opinion, for this feature is just using it as a good scan. You can find unusual orders that maybe you didn't notice in the overall feed. Over here, you can see KRE up 124% since these puts were added. A lot of bank stocks got hit pretty hard in the recent sell-off, at least in the last 2 days. So this one did very nicely. But again, you just have to understand the context of these orders. Try to look at a chart. I like to pair technicals with these. I look at something, let's say, for example, here we have a 455 call. This is super unusual for the 9/29 expiration. What I'll do is I'll look at the chart for SPY. For example, over here, this is actually what I did this morning. Didn't just base it off of the power alert, but still, I looked at the chart over here. I liked what I saw. I saw support from down here, fit from my thesis from the day before that I like to see a double bottom, but for more upside to the box. So this order that I just showed you here would track very nicely with my overall thesis and ended up getting in calls earlier for some more upside. So that's just a basic explanation of how I'd use it. Again, not every single one is going to be an insane winner like we saw here with Amazon or KRE from a couple of days ago, but still, this is a nice way to scan for tickers. Regardless, going back to Amazon here though, a very large upside move today, and based on the close, it actually looks like it can go a little bit more, especially if the market is able to bounce here like I'm expecting in the short term. First thing that I notice over here, two things. We have our first trend line. This is the one I'd consider to be the main one. It would be right here. You can also argue that there's another trend line which goes to the top over here, and yes, that would be valid. We know that there's two key points of resistance, as you can see here, between both of these days, and then also a resistance earlier today after it retested, and then it actually broke out afterwards. So this is the main trend line that I'd be watching. However, you still need to be aware of this one as well, which is what I'd like to see get taken out. And if it does get taken out, there will be a lot more upside. We'll see mid 140s actually if this is taken out, which is around 139. So I'd be watching both of these trend lines. If we do get a break above, hourly confirmation is best by far, but depends on how much volume's coming in. If it's earlier on in the day, then I may take a 15-minute close above as confirmation for more upside. But I will be watching this, continue to watch both of these trend lines for a possible long trade setup. As long as we can stay above both, especially crack this next one up here, that's going to be ideal for a lot more upside. Very strong move today. It was clearly a buy the dip scenario from the first 15-minute candle after it continued up, filled the gap, and just continued later on in the session. So that whale is definitely happy from earlier today, as you can see there, and there's still potential for more continuation after. I like the way that this one looks, and just based on risk, I'd say 136 is a good risk level, just based on how this has acted as a support lately, and also a supply zone. Because remember, both supports can act as supply zones afterwards if just the inverse scenario happens. And over here, for example, it acted as a key resistance level at first, and then eventually a support later on. So a hard candle closed below multiple times over here, hard resistance. Eventually it broke out with a strong candle here, retested later, bounce, retested, actually went below, and then now we retested and continued up higher. So if we do get below this, I'd say an hourly close below, then I would stop out of a long position here. But I do like this one. Definitely keep your eyes on it. Regardless, that is all for me today. Continue to watch what I shared in this video, whether it be the S&P 500, Amazon, and also Nvidia, because this is an interesting development, like I said earlier, with the amount of shares being sold recently and those rumors that appeared. So we'll see what happens here. It's certainly a fun stock to follow, at least just based on the news, considering how much it's been up throughout this year so far. Other than that, though, I will see you guys next time on Sunday for the weekly prep video.